Hi and welcome to the Trading Bell Show. Now, Standard Chartered Bank have released their results, quite impressive. And I'm speaking with Chief Executive Kariuki Ngari to just dissect some of the factors that led to this and more. Kariuki Ngari, welcome to the show.
Thank you. Thank you.
Thank you so much for your time. And I want to congratulate you on three fronts. First of all, one, climbing Mount Kilimanjaro. I've just gotten to know that. And running 21 kilometers. And of course, your stellar performance, 15% profit after tax. Congratulations.
Thank you.
Yeah. First of all, on the side of the movements, is there an inspiration behind it? Because now you're moving a lot and doing well.
It's important to stay busy and some of these challenges to meet them and really enjoy doing it. And as someone told me, the mountain is there, so why not climb it?
Love it. And speaking of the mountain, let's talk about what you've done in the bank and your performance, which is quite commendable. Looking at some of the headwinds to what they are across the sector, many of the things that are happening. And I wanted to just get a glimpse from you, and what are some of the factors that have led to this performance that you could highlight?
I think one of the things is, we've had a very good performance for 2023. Mm-hmm. It was, on a macro front, it was a very challenging year, but we managed to stick to our strategy. Mm-hmm. And strategy execution was critical to attaining, and really sticking what we call the four strategic pillars of the network, affluent, mass retail, and sustainability. Really focusing on those strategic pillars is what delivered the 23% revenue growth, and then bottom line of 15% PBT, and also a 15% increase in profit after tax. So being very clear and taking the opportunities, because even in a challenging environment, there are opportunities that come the client's way. Yeah. And we're able to be there to either give them our balance sheet and to help, or give them our expert advice, or to give them the opportunities to be able to do what they needed to do. And that translated into that 23% revenue growth. Okay.
You spoke quite at length today when you were releasing these results about your strategy. And I quote some of it: network, affluent, mass retail, and sustainability pillars. Of all these pillars, which one do you see? Because there's been a lot of questions about, is it in the mass market, is it in the corporate? Which one do you see as a key driver? I know all of them are contributors, but something that has really led to the numbers that we see.
I think for now, the two, network and the affluent, really are the biggest contributors. Okay. That really is, if you look at our overall numbers, like as I said, for our consumer, private and business banking, CPBB as we call it, 15% of the revenue is actually from the affluent segment. Okay. And then the network is a big contributor on the corporate side as well. Mm-hmm. So those we can say, that is our bread and butter, our very strong areas of growth and opportunities. But we believe as well in mass retail and sustainability, it's about the future. Okay. And the future is now. Okay. And the mass retail is saying, how do we serve this segment profitably? How do we ensure that it's giving a fair return? Because that segment, if you're not careful, it can really lead to ballooning of cost. So how do we, with our branch network, which is fewer, for among the tier one, the fewest, how do we ensure that we're able to cover wide coverage of the mass retail clients? So our investment in technology, that helps. Okay. Sustainability is about now. We are talking about it globally. When we talk about mobilizing of funds, how do you get the money from the global north in to help the countries in the global south transition and really start doing matters climate? And how do we start understanding what we must do? That we are seeing is an area that is an area of our expertise for us, looking at our global network and how we can bring it here, and how that can translate into the profitability in the years to come. If I take you like 10 years back, or even 5 to 8 years back, we never used to talk about wealth. It was tiny in our books.
You're right.
But we stuck to it because we believed it's the future. We could see it as we're getting more, the middle class continue to grow. We could see Kenyans looking for alternative investment options. And then we could see that this is going to happen. And we have started to see that come into fruition.
Okay. Yes. Speaking about the mass market, we're in the news business, and sometimes we have had rumors coming out there, and there was a creation as if Standard Chartered was sort of shying away from the mass market. But listening to you today, they're still a critical factor of your strategy given that. So I just wanted to clear the air. Are they still your core?
Rumors is part of life, and you can't respond to all the rumors, but I think it's showing us, talking about being a strategic pillar. Okay. You cannot have a strategic pillar and then you are exiting a certain segment. Okay. But it's a question of looking at it and asking yourself, how can I serve this segment profitably? Okay. Whichever business you are in, you've always got to ask yourself, am I serving it efficiently, and am I serving it well enough to be able to give a return? Because the shareholders are expecting a return. when you announce our results, there are shareholders who are really excited. That's what they're looking for. They're not looking for stories. So it's a question for us to say, what are you going to do in the mass retail segment? How are you going to serve it profitably? How are you going to widen the reach? How are we going to ensure that we've got many products that these clients can engage with? And in that engagement with our products and services, then we get a fair return. Hence, investment in digitization.
Fair enough. Let's talk about the same customers you're talking about. When I look at your loan book, customer loans increased by 17%, which definitely has a significance to this. And I wanted to know, what does this growth indicate about the market demand and your lending strategies?
I think it indicated two things. One thing is, as I said, the opportunities are there. And so clients were looking for these opportunities. And so we are there to help them. And especially on the corporate side, we saw that clients, the opportunities coming our way, and they needed either to expand or to launch a new service or product or to expand. Because a lot of despite it being a challenging year, most of the investors are long-term. They've seen this before. I remember meeting a client who told me, I've seen many cycles. I was here in 2007 and everybody was doing XYZ, but we doubled down and said, Kenya isn't going to go anywhere. And that's the long-term view we have in this country as well. It's a very long-term view. So when we see the clients, it's challenging, but the opportunities, and we're able to step in and able to give them our balance sheet for them to continue growing. And that growth was both in whether it's local currency lending or with foreign currency lending as well. That's an area that we're able to participate. And then also on the consumer and the CPBB side, we started seeing growth towards the end of the personal loan side. It was challenged at the beginning, definitely because of the uncertainties, whether it was new taxation measures. But towards the end, people started to calm down. You could start seeing people now more confident to start borrowing again. We started seeing our mortgage book starting to turn. We started seeing our requests for mortgages or personal loans has really ticked up from around November. And that has continued into these 2 months of the year, which shows people there's confidence that they start to come back. And we are optimistic about 2024 because of what we are seeing, the general trend happening within our client base.
You have a strong position on your assets, and I was keen to look at your financial assets. And when I look across the board, looking at your peers, if at all we call them that, there's been a bit of a cautious approach when it comes to especially government papers and securities. You're not as well exempt from that. And I wanted to know, what's informing this?
In terms of the reason we did, and especially when we talk about the government bonds and why we sold off some papers, is really to take advantage of the market and the opportunities that arose. And there's one thing we as one of our strategies, we call it in what we call our asset and liability committee, which is ALCO, is that we'll always be a long lender. We don't play short. So in the interbank, we are not active borrowing. We want to be a lender. So we have to ensure that we've got sufficient liquidity to be able to participate in the interbank and also have enough liquidity to be able to avail our assets to clients when they come to us. And so there was a time it was challenging for us. And that's when one of the key actions we always prioritize to say, this is how you build in liquidity. One of them, what most players might do is pay up for expensive deposits. That will always bring up, of course, your deposits. Or you may make a decision like we took and said, we'll sell off the long-dated bonds and paper. Because we're in a rising rate environment. Those papers were probably 11-12% because we bought them a long time ago. But when you reinvest it, you're investing at 16%. So you look at the circumstances and say, overall, yes, you'll take short-term pain, but long-term, it'll be a very, very different. And I'm sure that will be reflected in our results for 2024.
Okay. Great. Finally, on the numbers, talking about your NPLs, I noticed maybe in the last quarter there was a great improvement or something, because now you're at 9.7% in terms of the ratio. What's the secret? What have you done?
I think it's been a long time coming. If you've been tracking our performance over the years, that number has been way above the industry average. But it's something we've been working on with clients. What actions do we need to take, especially in the legacy names? These are names that borrowed a while back. Is to say, how much provisions have we already taken? What do we need to do now to actually clean up and say, let's just clean this up? And then what actions do we need to take? And then having conversations with some of those clients and say, how can we settle this? We don't want to make this prolonged conversation or using the court system to go to keep on. The ones who are willing, we sit down together and come to a settlement.
Yeah.
That coupled with the growth that has come through because of our assets has changed that mix.
Okay.
And we are really pleased that we are below 10% after a very long while.
Absolutely.
Yes.
Congratulations on
Thank
that.
you.